And okay, here we go. So, hey, it's Rick Angel here with Keller Williams, and I've got Michael Owens with me. He's a local mortgage lender with a guaranteed rate, and he's been in the mortgage lending business for 24 years. Um, so that basically what that means to you is he's been through it all. We're going through a time right now that's uncertain, and so this isn't the only time this has happened in our lives, and certainly in the 24 years of the experience of Michael Owens. So what I want to do is just connect you guys with Mike here today, and talk about a couple topics that are out there that you may have questions about. One of those in particular, with the part of the stimulus plan that the government's brought up, is something called a mortgage forbearance. And so I just wanted to see if maybe, Mike, if you could just tell us what is mortgage forbearance, and what's the positives and maybe some of the negatives of this program.
Yeah, the CARES Act allows for basically any reason. If you have a COVID, inspired need to pause your mortgage payments, you can do that for up to 180 days. And then you can ask for an extension another 180 days. But it's really just pausing your mortgage payments. You cannot be charged any penalties or fees, but the interest does accrue like it normally would on your loan. It's basically just pausing those payments. You really need to contact your servicer to find out what the options are. Whoever you're making your payments to is your servicer. You could have a loan that's with Fannie Mae or Freddie Mac, maybe serviced by a Bank of America or a Wells Fargo. You might have a VA loan or an FHA loan or a USDA loan. Those are government loans, and they're basically, those are backed by one of the government agencies. There's also privately held mortgages where your bank may have in their portfolio, or it might be a jumbo loan. Those types of forbearance agreements are completely different, but that's why you really need to contact your servicer. A forbearance agreement is not just free mortgage payments. There's a reason behind it, and it's not just to take advantage of free 6-month vacation from your mortgage payments. If you can make your payment, you really need to make your payment. If you're out of work, you get laid off, or you're furloughed, that's what this is designed for. But the way this was laid out, they really had you didn't have to have any kind of proof that you really had a hardship. You could apply for a forbearance and it's granted, and they can't ask any questions. And I don't think a lot of people understand what that means. If you can make your payment, you need to keep on making it. If you can't, that's what this is designed for. You need to figure out what the repayment option is. It's not like they're just saying, no, don't make payments for 6 months and don't worry about it. They're going to ask for that money back one way or another. It could be at the end of 6 months, you got to make a lump sum payment of what you didn't pay during that forbearance agreement period. Well, that doesn't make much sense. If you can't make the payment, what are you doing setting that money aside? I mean, if you don't have the ability to make the payment, you're not going to be able to make a lump sum payment when that period's up. That's one option that could come into play, is a lump sum due. Another thing, they could add it to the end of your loan. Now that would just be extending out your loan term by 6 months. That's probably easier to swallow. And another option could be that when your payments start back up, they increase your payment to make up what was not collected. So for instance, your payment's $1,000, they might bump it up to $1,100 or $1,200 to make up the shortfall over a 12-month or 6-month period. So Forbearance is not a vacation from your mortgage payments. And I think you're going to probably, you might see some changes in the way they roll this out. I mean, there's already been a huge increase in the number of people applying, and mortgage servicers are getting bombarded with calls. You're going to be waiting for a long time to get through to somebody. And then you need to ask those questions. What are my repayment options? Are you going to ask for a lump sum, increase my payments, add it to the end of the term? But it's definitely not a vacation from your payments. And if you can make your payment, you're still employed, haven't lost any income or wages, you need to keep on doing it like nothing happened, because it's not just a free vacation from your payments.
Okay.
So you're really going to know what you're doing there.
All right. Well, yeah, thank you. So the biggest thing I take away from that is that, if you are in a hardship, and you cannot, such as you can't make your mortgage payment, that's what this is for, to help you through that time. The biggest thing is to remember, though, is that it's still money that has to be paid back.
Right. It's not forgiven. They're going to collect it at the end of the loan, or a lump sum, or increase payments to make it up. So it's definitely getting paid back one way or another. And that's where you need to really talk to the servicer and find out what that game plan is, because it varies from one to the other.
Okay. So one of my something that I would recommend to people out there listening and watching is, this money that the government's supposed to be sending everybody, the $1,200 for individuals or $2,400 for married couples, depending on, of course, what you make and everything. When that does come in, the idea and behind that is to help you to overcome, lapses in your budget if you have been laid off. And that would be money that you need to put aside to be able to make your mortgage payment with, and not just go out and spend it. Okay, because again, mortgage forbearance doesn't mean that you, that you still got to pay it back. Okay.
And hopefully this is short-lived, and that stimulus check, if you do get furloughed or laid off, it's short-term. You're right back to work, and that was just your safety net. You make your payments and continue on like nothing happened.
Okay. Good stuff. Thanks, Mike. The next topic I want to cover was interest rates. So that's something everybody loves to look at when they're possibly considering purchasing a home. Where are the interest rates today? What's been happening with interest rates since the whole COVID-19 came up, and what do you foresee down the road?
Well, the rates right now today are probably at or near all-time lows for conventional and for your government VA, FHA, USDA products. Rates are excellent. There was a 2-week window, probably 2 weeks ago, where rates were bouncing all over. You would have thought they were at all-time lows because that's what you saw on the news, but they were actually may have been at 6-month highs because of demand for mortgages dried up.
Can I stop you right there for a second? You mentioned we would have thought they'd have been all-time lows. Are you referring to when the Fed dropped interest rates to by 0.5 point to 0, and everybody thinks, interest rates are going to fall too?
That's part of it too, and that rate is completely separate from mortgage rates.
Okay.
So you've got mortgage-backed securities, which is where a loan is basically packaged up and sold in a package of loans to Wall Street investors. And it's got a fixed rate of return, and those investors are assuming that rate of return, and that's why they're buying that. And when the shutdown basically happened, those typical investors were trying to sell mortgage backs instead of buy them. So the Fed has stepped in and pretty much purchased everything and are still purchasing everything right now. But that's why you had a little lag. 2 weeks ago, rates started to go up because the typical buyers weren't buying those loans. So the Fed stepped in and has tried to stabilize the market, and they've done a pretty good job of it. But rates are awesome, except for probably one or two segments. Jumbo rates, that's your loans that are over 5, 10, 400. There's really no buyers of those right now. So if you need to borrow more than 5, 10, 400, you're pretty much out of luck getting a favorable rate.
So what do you mean by there's no buyers for that type of loan? Because a lot of people might be thinking, I'm a buyer, I'm a home buyer. What do you mean by there's no?
Those types of loans are not guaranteed by Fannie Mae or Freddie Mac.
Okay.
So you have private banks that make those loans. Your Bank of America, Wells Fargo, Chase, different banks will actually issue those loans, and then they'll try to sell them as well. But they don't have that backstop of Fannie Mae or Freddie Mac or Ginnie Mae. Ginnie Mae being your FHA, VA stuff. So those rates have really just gone sky high.
Okay.
But there's some counties in the country that are considered high balance counties where the average home price is much higher than typical areas, average areas. Those rates are not as attractive either. So there's been talk that the Mortgage Bankers Association's trying to reach out and get those rates to improve, where the Fed might step in and buy some of those as well, but they're not too concerned with those right now. But rates are pretty excellent across the board.
Yeah, just let's talk about just a kind of a typical average price point of in the area of $200,000, and somebody looking to purchase a home, in that range. What options do they have?
Well, it just depends on credit scores and down payments. That's a pretty broad question, and because really conventional rates are excellent, but if you've got limited down payment options, then maybe FHA or some credit issues where the credit score is not quite as high as is desirable for a conventional. But the rates are pretty good across the board right now for FHA, VA, and conventional. You're talking low threes on most of that stuff, if not closer to 3.
Okay. What's the advantage of why would somebody do a FHA loan versus a conventional or USDA or VA? What's the difference in those?
Well, obviously VA loans are for veterans where you can put 0 down, right? There's no down payment requirement. And those are excellent rates for our veterans. FHA is got a minimum 3.5% down payment requirement. And typically for somebody that may not have the best credit score, had some issues in the past, or it just is not in your mid 700 range. There's different pricing for conventional loans. It's called loan level pricing adjustments. It's complicated, but the pricing on those rates is kind of tiered based on your credit score. Whereas FHA is more forgiving. Lower scores aren't going to get quite the, adjustment to the rate as you would see on a conventional. Conventional's also got low down payment options, 3%, 5%. So higher scores with the ability to make a down payment, you would typically do a conventional loan. lower scores, minimal down payment, you're going to go FHA. That's just kind of the way it works, I think.
Okay. All right. And a lot of people out there, the last one is USDA, and people look at that option and they think 100% financing. That's awesome. So what are the limitations of, if somebody was looking at a USDA loan? What are the limitations of that?
USDA is designed for a low to moderate income, and it fluctuates based on the number of individuals in the household, but it looks at total household income, and the property also has to be considered rural by the USDA. So there's location restrictions and income restrictions. The income restriction is it's not conservative like you would think. For low to moderate income, a family of 4 can make up to about 86,000. That's pretty good income. And then it goes up from there if you're 5 or more. But the key is location and not exceeding that threshold. And it is a 100% program. It's got low MI mortgage insurance, but it's on there for the life of the loan.
Okay, awesome. Thanks, Mike. We're probably going to wrap it up, and I just wanted to kind of recap what we've talked about here today. So first, we talked about the mortgage forbearance program out there, the options and the reason it is out there, and the pitfalls that you can run into. So being careful if you have to use that. Just remember that you do have to ultimately make your mortgage payment. So just make sure you contact your service provider and ask them the right questions. Say, okay, if I don't make my payment this month, when does it have to be paid? How would it have to be paid?
Right.
The other thing we talked about is interest rates. They are stabilizing again, and they're still historically low. It's a great time to buy if your own personal economy is doing well and you're got an essential job and feeling pretty secure about that. And then there's also still many different types of loan options out there. If you're a higher purchase price jumbo loan, 400, 500,000 and up, maybe limited options right now, but for the average home buyer out there, there's still all your typical options. So is there anything we missed? No?
I don't think so.
Okay.
Definitely a good time to buy if you can actually get into the house.
Yep. All right, you guys. So if there's one more thing to take away from this meeting, Mike Owens talked about a lot of different things that goes over my head, and he's definitely, you can tell that he's very educated in the industry and in the market. He was talking a lot of terms that a lot of us don't understand, but that's okay. The biggest thing to remember is that just contact mortgage professional, contact Mike when you're ready, contact me, and together we can make sure that we lead, guide, and protect you through the home buying process and take care of you. I'm going to say bye to Mike here, and then on the way out, I'm going to share his website with you here, and just so you'll have his contact information. Of course, you can figure out how to contact me. So Mike, thanks for your time here today.
Yeah, thank you, Rick. And
all right.
I'm always here for you.
All right. So I'm going to share this website here, right here for everybody to see. Okay. So there's his website. You can go to rate.com/Michael Owens. Okay. And click on the apply now button there, or just give him a call. Okay.
Yeah, cool. Appreciate it.
All right. You guys take care and have a great day.
Thank you, Rick.
All right. Bye.
Bye.